If your mortgage is up for renewal and you sign the first offer that your bank sends you, this could quietly cost you over $80,000. And most Canadians never even question it. They get the letter, they see a familiar logo, they assume loyalty means fairness, and they sign. In this video, I'm going to show you exactly where that $80K is going to disappear, why banks structure renewals this way, and what strategic homeowners do differently. Let's go. First, you gotta understand this. Banks, they freaking love renewals because renewals to them, they're low effort, it's low hanging fruit. They don't gotta work for your money. There's no competition, there's no negotiation, there's no friction. And friction is what protects your money. It's what keeps you guys ahead of the bank when the little guy is always losing the battle. When your term ends, the bank, they already have your mortgage. They already have your payment history. They already know your income because they see your payroll deposits, and they already know your house because they've already mortgaged it. So instead of competing for you like a new client, they send what's called a convenience offer. And convenience, it's expensive. The letter, it usually looks simple. It's like, your mortgage term is ending soon. Here's your new rate. Click here to sign. No meeting, no strategy, conversation, and no real explanation of what's happening. Just a number and a signature box. It costs thousands. Let's run some real numbers here. Let's say we're looking at a $750,000 mortgage. Your bank, they send that renewal offer usually 30 days prior to hope to catch that you're not unprepared and that they have you like against the wall. They send you a renewal offer of, let's say, 4.79, but the actual market rate available through negotiation or through me is closer to 4.29. That's 0.5%. That difference, it doesn't sound dramatic right away, and I'm the last guy to talk about rate here, but most people look at that and they think 0.5%, it's not a huge deal, but mortgages, they're big fucking numbers, and small percents on big fucking numbers become big fucking money. Over a 5-year term, that 0.5% difference could easily cost you anywhere from 18 to 25 grand in extra interest on this specific number. That's only on 750. Average in Vancouver, it's well over $900,000. That's one renewal. Now, if you're 25 to 35, multiply that across 2 renewals, maybe 3, 4. Multiply that across the next 15 to 20 years of your mortgage. Suddenly, we're not talking about small potatoes or a small mistake. We're talking about 60 to 80 grand quietly transferred into the bank's fucking pockets and not yours. And the crazy part is, most homeowners, they never even see it happen because it's not taken directly from your account in one big payment. It disappears slowly. They grind you month by month, payment by payment, very quietly in the shadows. But here's the part that most homeowners miss. The rate, it's only one lever, and I've been screaming this from the mountaintop for years. A renewal, it's your chance at a reset button. It's your opportunity to reassess your mortgage completely from a 30,000 foot view, looking down at your family's mortgage in the next 3 to 5 years. You can look at your amortization, your payment structure, your flexibility, your long-term, your short-term strategy. But most homeowners treat the renewal like paperwork, like clockwork. Strategic homeowners, they treat the renewal like a financial checkpoint. Let me give you a quick example of clients that I worked with not long ago. Let's say they bought their home 5 years ago. At the time, they had young kids, right? Childcare costs were high. This is pre-$10 a day daycare. Cash flow was tight. So they stretched their amortization to the full 30 to keep payments manageable. It gave them a lower cost of funds. Now, 5 years later, things look different. I'm living this right now. I have a 2-year-old daughter and I'm looking at what the next 5 year looks like for my family. Those clients, their kids are now in full-time school. Their incomes have increased. Their debt is lower. The renewal is the moment that they could shorten their amortization and dramatically accelerate their mortgage payoff. But if they simply clicked accept on their bank's renewal offer, nothing changes. That opportunity vanishes. And that's the real cost of passive renewals, not just rate, but loss strategy. And that's where working with me comes in, because all of my clients, we're in contact with them every couple months of their mortgage. They're my client hopefully for life, and I build a friendship where I'm going to check in at every 12-month milestone. Has anything changed in your family's finances? Have the kids gone to school now? And 6 months prior to renewal, we're going to have a conversation and look at the strategy. Now, let's talk about the psychology behind it, because it's a big part that no one ever talks about. Why do so many homeowners just sign that fucking renewal notice? Because the renewal, it usually arrives during either a busy season of life or too close to renewal where you feel panicked. Work is busy, kids are busy, life is busy. The bank is counting on this. They know the path of least resistance always wins. And when people are busy, convenience often beats strategy. Here's a quick reality check. When you bought your home, you probably shopped around. You compared lenders, you compared realtors, you compared mortgage brokers, you talked to me or other brokers, you negotiated. But 5 years later, most homeowners, they're lazy. They don't do any of that. They just sign. Let's pause for a second and think about that. The largest debt most Canadians will ever have, and the decision that controls it for the next 3 to 5 years, often gets about 3 minutes of attention. That's nuts. That's the dangerous part, because you don't feel that loss immediately. Your payment might look almost identical. Your life is going to continue. Nothing dramatic happens, and there's no alarm bells going off, no warning sign, just slow erosion. And wealth, it's rarely destroyed in one big explosion. It usually gets eroded in small percentages. So if your renewal is coming up in the next 12 to 24 months, comment renewal below, because this is the moment where passive homeowners and strategic homeowners, they start to separate. Let's talk about structure here now. The renewal, it's not just about focusing on rate and trying to shave 0.5% off. It's about asking better questions. Does this mortgage still match my income trajectory? Should I adjust my amortization up or down? Do I need stronger prepayment privileges? Should I increase the flexibility here? Is there equity in my home that should be working differently? There's so many things to discuss at renewal, and renewal is the only time most Canadians will revisit their largest liability, and most treat it casually. Banks do not reward loyalty. They reward ignorance and leverage. If you don't create competition, there's no incentive for them to sharpen their offer to you. And this isn't about switching banks just for the sake of switching. Sometimes staying exactly where you are, it's the best move for you and your family. But you should arrive at that decision intentionally, not passively. You should know the numbers. You should understand what your options are and what they look like. And you should negotiate from a position of strength. Because once you understand the strategy behind your renewal, the conversation changes. You stop asking, what rate did they offer me? And you start asking, what structure and strategy actually move me forward financially? And that's a completely different conversation. It's a completely different experience. And this is what my clients get on the daily. If you want help running those numbers properly, before you hit that renewal button, there's a link below to book a strategy call with me. I'm going to walk you through your mortgage. I'm going to show you what your options look like. And I'm going to help you see the difference between convenient and optimize. Because renewing blindly, it's not safe. It's fucking expensive. You don't renew mortgages. You reposition or you restructure them. And when you're done with this one, check out last week's video on why high-income families still feel broke, because the structure of your mortgage, it plays a massive role in that conversation. I'll see you there.